All right, hello. Let's jump right into it. S&P 500 continues to try to push higher. We did make a new all-time closing high, but we didn't make a new high on the S&Ps relative to the 29th of November. So we're still kind of waiting on that. A close above that would be nice. Other than that, we're just at the top end of the range here. So there's two things that could happen. One, this could keep going, or two, could kind of consolidate, maybe pull back to the bottom end of the range here around 1780. Whatever happens, happens, but the idea is to stick with what works. And one thing I do want to point out is, I did mention last week the potential for a pullback, and basically we got that within 2 or 3 days stretch, and then the jobs report came out, and the market reversed and went higher, and we saw follow through today. It just is what the market's doing right now. It's going up, and it's pretty relentless. However, the only thing I can say is, yes, the market's going up. It's not at a great entry point, the overall broad market. So don't force your entries on trades because it's really not worth it. ExxonMobil, this is one that we bought the dip. I don't know if we bought this on the 2nd or the 29th, but regardless, we bought it at the bottom end of the range, and this thing continues to push higher. Now we have new highs here, and yeah, that's new 52-week highs here. So this is in a confirming uptrend. We bought the dip, and now we just have to manage the trade. So if I look at where it's trading now, your 1 hour average true range stop is 94.45-ish, puts you in the green for the position. If you want to place your stop at break even, which you should have an entry, really below 94, but ideally below 93.5. So anywhere around there, stop should be in profit territories. All right, Apple, now, it had a nice day today, but it couldn't, basically you see this 570 level, where it was resistance back here on last Wednesday. Well, guess what? So far it's resistance again, so stick with it. But realize that you have two levels to watch to the downside. One's 560, which was this recent low here. Now, that's all it is. It's just a recent low. It has no real information in it. And what I mean by that is the current price action. We would have to get above these levels here for this swing low to have any meaning, which makes me look back down towards 550, the last swing point that had meaning, where we had a nice move up in this circumstance in an uptrend, and we had a pullback, and then we had new highs. That was right here around 550. Those are your two levels to watch. Three levels: 570, 560, 550. If you get nervous, go ahead and take half of your position off here in the 560, 570 range. That's not a bad trade from 520 when we originally bought Apple. Deere, this is proceeding higher. This is good news. It had a really good day today. It's had 2 really good volume days, or I guess 3, the last month or so. And that's what you want to see. This is a stock that's been in consolidation for a long time, half of a year. And we never retouched the 79.5 level. That's a good sign. Then we got to 80.5 or so. Never touched that. We touched it twice back in July and August, but in October we did not touch it. In November we did not touch it. All right, we have our move to the upside, move to the downside, pierce new lows, but we didn't close below it and immediately reversed after, and then eventually we saw on the 20th we did make new highs. Okay, what that tells me is that we have the potential for an opportunity, whatever you want to call it, for Deere to move higher. Why is that? Because Deere set new swing highs after making new swing lows in a sense. It's telling you, okay, this is what it's telling you. It's telling you that this general range is where you want to be a buyer on Deere. We get the pullback, and then we had this huge up day. Tough to see that happen when you're so close to a buy point and you just wanted a couple days where you just get some, positive buying, but, nothing like this. However, that's what happened. The stock consolidated sideways for a couple days, and then we had another move higher today. This is a stock that surely looks like it wants to move higher. Where are your targets? Let's keep it relatively simple. 88.5 to 89.5, 90, 75, 94. What do those levels mean? 88.5 is the top of this high volume area. I don't consider that as much of a target as 89.5 to 90.75 high volume area right here. We should, theoretically speaking, push through 88.5 and into 89.5, 90.75, where you'll probably want to look to take some profits off the table. And then there your ultimate target is 94, which is closing this gap here back in May. And also it's the top of a high volume area. So you're at 87 now. Consider you risk $5. It's a hard risk reward right here unless you're holding for $94. Or even then, it doesn't have the best risk reward. But regardless, it looks like Deere wants to go higher. Philip Morris, this is a new one. This looks like a name that's going to go up to 89.37, which is, or 89.40-ish, which is its point of control for the year. What I see here is Philip Morris is holding 85.64, which is the point of control for last month. That's what you want to see. You can see price tested it both last Friday and today. Both times it was right to be a buyer. All right, now a couple stocks that I think, maybe. Berkshire, what we're seeing here, we did make a new high today. Not a closing high, but we did make a new high. So this is pretty much a range, 113.5 to 117.25. And if this thing moves up or higher, the appropriate stop would be right under 113.5. So if this is a name that looks good, then maybe it's something that you want to be a part of. You can see the majority of the volume in this year has been between 111 and 118-ish. This is a higher base. You can look to buy and have basically a hard stop under 110, and Berkshire, as long as the trend continues up, Berkshire is a good candidate for higher prices. All right, looking at a few new names, Chevron. What I like from Chevron right here, right now, is the bounce we are having off of the point of control for the year, 120-ish. We've had 2 solid days in a row. Today's volume was much better than the prior. Well, honestly, it looks like the prior month or so. But just keep an eye on it. I'm not sure if this bounce right here is the right here, right now moment, but it looks good, and it looks like we could retest the high 120s. Eli Lilly, I'm going to mark off this big high volume area because it looks like it matters. And you can see price did a fairly good job of staying within that zone. I want to see it touch the point of control for the year around 53.66. That would be closing the gap here. We do have some constructive price action. Wow, my computer. All right, constructive price action, meaning we have our low here, 47.53. What happens? Price moves higher. We establish a high here at 51.14 or so. From there, what happens? We consolidate sideways, and from there, you can see that price has a slight upside bias. Why? Because we poked out of the top of the range more. We were at the top of the range more. We never retested these lows, and it just looks like something that wants to move higher. So you can play this one of two ways. Wait for an opportunity below 50, or just start to buy now. Don't necessarily buy a full position right here, right now. Give it some time, but getting involved won't hurt. And if we get a nice move, it will be up towards 53 to 54-ish. And if you're just looking for base hits, these aren't bad plays.